So I'm going to start off with 11.05, which is the verification of opening balances for a new engagement. Now, I will be skipping between the various files that I have at the moment. I'm currently in my large RAC file, and the large RAC was the one where we said that this was a new engagement, and therefore we need to complete the verification of opening balances for a new engagement rather than 11.10 opening balances for a continuing engagement. Just to quickly show you what 11.10 will look like, because I'm in the large and I've said this is a new engagement, it actually just tells me in one line, it's been indicated on 10.00 that this client has not been audited before. It is therefore necessary to audit the opening balances as a new engagement. Please use 11.05. So if you open up the run document, this is all you're going to see. For a large client, or sorry, for a new engagement, when I open 11.10, all I do is I say set as not applicable, and then I go and I complete 11.05 rather than 11.10. The workings are exactly the same in the two. The difference between 11.05 and 11.10 is that we've got additional questionnaires in place to specifically deal with gathering information from the predecessor auditor and looking at the opening balances of my client to ensure that we can actually go on with this audit, that we don't need to maybe go and re-audit the prior year figures. Now, where this becomes quite important is, for instance, where it wasn't an audit last year as well. Maybe it's a consideration that we need to be auditing both years. That's up to you to decide, but specifically there was a previous auditor, and so you'll see that there are specific questions related to that previous auditor in here as well. So the first sheet that we look at, it's just called opening balances. What we're doing here is we're firstly documenting, have we obtained permission from the client to actually communicate with the previous auditors? Now that's one of the Code of Conduct rules. We have got to get permission to speak to the previous auditor. We may not go and speak to the previous auditor without our client's permission. Once we have that permission, then we can contact the previous auditors and make an appointment to inspect their working paper files to test the opening balances. And if the previous auditors refuse access to the working papers, we need to try alternate procedures to verify the opening balances. So first choice, first best option is that we can actually go and have a look at those working paper files. I don't know how you feel about another auditor coming and looking at your working papers. So that is a professional decision that needs to be made. Some people are going to allow you, some people are not. But here we document, did you obtain that permission? Did you make an appointment? And based on that, we move on in the file. Where we have been able to look at predecessor auditors' working papers, we go and we give a description of the files that we looked at. So was it this audit file? Was it this their permanent files? What was the general content? Were all the working papers available for us to review? So there's a number of questions just about how that review progress happened. Okay. Now, there is also an opening balance test sheet. Just going to open that up, and question 5 here is actually referring specifically to the opening balance test sheet. And what we're doing here is we're wanting to have a look at whether or not we've got the correct trial balance basically in our Draftworx file. I'll come back to this and exactly how this works. So I just want to go on with the opening balances. We look at question 6, adequacy of the audit performed in the preceding period. There are a number of questions there. We go and look at what further audit procedures we needed to perform to assess risks, and there's specific areas that are given as examples. You don't necessarily have to do these. This is just related to where the predecessor auditor found risks, what additional procedures. That's where you want to focus. Where were there risks in the previous period? Okay. We look at uncorrected material misstatements, if there are any, and you'll see just scrolling down, there are a number of considerations. There's a reviewer's opinion in here, and then an overall evaluation. What you will see is, firstly, we are given a question, yes or no, has management provided unreliable responses to requests for information and explanations? So we're hopefully going to say no to this. But if we say yes, we need to document. If management is not giving us good answers or appropriate answers to our questions, what impact is this going to have on our audit? We then reference to a risk response that we may raise in relation to this. So we say here what the impact is going to be. So is that going to be increasing the level of risk? We'll then hyperlink it back to, and we'll get to it later, 12.95, where we document the overall risk on the audit. And then what is our final response to this risk? What are we going to do? So we look at the impact in our response, and then we just reference to where that response will be carried out. It might be that at this point you don't know yet. You're still going to go and do the procedure, so you might not be able to put a hyperlink in immediately, but then just please do make sure that you come back and document this later on in the audit. Obviously, we come to a conclusion, and there are just also on the sheet, there is a sheet available where we look at account balances that were verified. So this is just referring back to one or two procedures on this opening balance sheet where we can go and say what checklist item have we referenced, what matters have we found, various documentation that we can put in place. Where we've needed to go and do alternative procedures, so in other words, we weren't able to access the prior year file, or maybe we weren't given access to a section, what alternative procedures have we executed, and what is the result of those procedures? Maybe you want to put a hyperlink in here as well, just to where you've gone and actually performed those procedures. So 1105, the bulk of it is actually just going through and deciding or looking at prior working papers if we can. If not, what is our alternatives, and just documenting that process in detail. Obviously, if it's the first year of trading for the client, this is not applicable because they don't have prior year balances. This is just applicable where you're taking over an audit from somebody else. Then coming back to this opening balance test, it's an area that I used to have to do quite often because our clients didn't process their audit journals properly. What we're basically doing in this sheet, and the next three sheets are all common between 1105 and 1110, is I automatically pull through the balances in the trial balance from Draftworx. So whatever you've imported into the trial balance, but please note that these are the prior year balances. This is not current year. And all you need to basically set at the start is what I've pulled into Draftworx in the prior year. Is that a new TV I've obtained from the client? Or is this a trial balance that I got from the previous auditor? Now obviously if you get the trial balance from the auditor, it's going to be far better information sitting in Draftworx because that should then be the final balances as per his audit. But if it's from the client, then we do still need to get the trial balance from the auditor. Otherwise, how can we compare and make sure we've actually got the right balances? So whichever one is in Draftworx, you just select from this drop-down, whether it's a client or auditor. All it does is it switches the naming of these two cells. So if I select that this is the TB from the auditor on the left, then I need to get the TB from the client on the right and vice versa. That's all that drop-down is really changing. However, the information from the auditor, in this case, we need to get from a source. So we need to get that trial balance. Now, historically, what I've seen done a lot, and which many of my clerks always did, was they'd go and manually put in, this is this trial balance, this is that trial balance, and try and match line by line, which is a very time-consuming process, wastes time on an audit. You don't want to sit and try and be matching account numbers the whole time. What we've done is you'll see that there's an alternate TV sheet, and if I open that up, this is where you can just go and value paste the trial balance in that you are using as your alternate. Okay, so you'll see the format. It just needs to be an account number, account name, balance. It doesn't have to be in any particular order. It can be in any order you want. And what I'm then able to do in the formulas is go and match these items line by line for you instead of you going and doing it yourself. I just want to scroll down and show you what happens. For instance, here are two new accounts that I've imported into alternate TV, and they are displaying at the bottom of this listing. So we're not missing them anywhere. All right. Here is an account that was not matched, so it leaves the line blank. So it's intelligent enough to pick up new accounts as well as adding or basically skipping lines for where there's not a match, so that you can get a line-by-line calculation of the difference quite accurately. Okay, and you'll see that it is going and posting various differences. Number of things to be aware of. You'll see that there is a little balance calculation. Is this trial balance and balance? At the moment it's 0. Remembering just that with Draftworx you can sometimes have a few rand rounding. So if your TB that's pulling in directly from Draftworx is out by a rand or two, don't be too concerned about that. Also, the TB from the previous year that you've put into the alternate TB, I've deliberately made this out of balance just to show this to you. It's telling me the trial balance is out by 500. Now, that could be because you actually don't have a trial balance that's in balance that you've imported. Maybe you've missed a line or two. It could be as a result of some of the formulas in here. Maybe something is not picking up correctly. We do sometimes have issues if your account number doesn't have a slash like the pastel accounts in, or a dash or a dot or something to distinguish it as a text block rather than the numeric block. We are seeing sometimes it's not picking up those matches, but if you do encounter that, please hop onto remote support and we can have a look with you and just take you through the process of fixing that up. But instead of now going through all these differences in detail, line by line, and trying to find the differences on here, we've actually done a summary sheet for you already. And that's on this all differences sheet. We literally just go and find all the line items that have a difference, and we give you a spot to go and give a comment. Now the idea behind the comments is to go and decide whether or not this difference is going to have an impact on my financial statements, whether it's just some sort of a classification difference maybe between what we sent the client and what was audited in the prior year. Now, for instance, we look at this difference here, the 770,000. You'll see that what's happened basically is that there is a new account number for the VAT payable. So that's not going to impact my financial statements. I'm not concerned. I don't need to worry about those. Okay. Another very good example that you'll probably see is, for instance, the difference between trade receivables and trade payables. You need to do a reclassification because there were debtors with a credit balance. So you've done a journal that you're not going to send to your client. You don't want him to actually move the debtor out of his debtors ledger and put it in the creditors ledger, but we've needed to do it for financial statement presentation purposes, and therefore you will see a difference. But it's between two balance sheet accounts. You're not concerned, and you actually know that ultimately you're going to do the journal again this year. You're not concerned and you don't need to do an opening balance journal. However, if we look at this difference, there's a difference between sales and trade receivables, and it's 124,000. That looks to be like some sort of a cut-off issue that occurred. So there were sales processed by the client too early, and it was actually taken out by the auditor. Or maybe it's something related to previous years. If you find a difference like this, there's a very good chance you need to go and process a journal in the current year to fix those amounts in your opening trial balance. Go and have a look at the nature, make the comments necessary, and go and process the journals that are necessary. Just to quickly pop over to the RAC medium, as I said, this is where our 11.10 sits there, and you'll see that this sheet is got those exact same 3 sheets available for you to be able to go and do the opening balance test. So even if you don't have to do the full test because it's a new client that we've seen in the large version over here, you will see that this has got more detail. That's for the opening balances, but it's got the same 3 sheets for you to actually physically test the balances at the end of the day. All right. That is 11.05. Just want to hop over to the next document, and that's sitting in my RAC medium, and that's 11.15.